Webull closed Wednesday modestly down at $13.97 per share, slipping just 3 cents or about 0.2% on the day. That's not a big move in itself, but what makes it notable is that the stock has now closed around the $14 mark for 3 straight sessions. This comes after rallying sharply on Monday, and it raises the obvious question. Is Webull consolidating here before the next push, and could it realistically be a $20 stock by the end of the year? That's a bold target, but not impossible. Let's unpack why. First, the fundamental story. Webull has been putting up the kind of growth numbers that investors want to see in an early-stage, high-growth fintech. In its most recent quarter, the company posted revenue growth of about 46% year-over-year. That's a huge acceleration from the 30% range of prior quarters, and it shows that their platform is gaining traction. Trading revenue alone grew more than 60% as equities and options activity climbed. On top of that, customer assets hit record highs, meaning that not only are more people using Webull, but they are entrusting more capital to the platform. That is a very important signal because assets on platform drive engagement, retention, and future revenue opportunities. Beyond that, Webull has recently relaunched crypto trading in the United States after a suspension. Crypto is one of the most volatile and high-margin segments a broker can participate in. When users trade Bitcoin, Ethereum, or other tokens, the engagement is sticky, and the revenue per user can jump significantly. We've seen other platforms like Robinhood benefit massively when crypto volumes surge, and Webull is now positioning itself to capture that same upside. With the digital asset market stabilizing and even showing signs of renewed life, Webull's integration of crypto back into its core app is a catalyst that could provide meaningful top-line growth in the quarters ahead. International expansion adds another leg to the story. Webull launched in the Netherlands earlier this year, officially marking its entry into the European Union. That's not just about the Netherlands. It's about using that foothold to expand across the EU in the coming years. Access to US equities, ETFs, fractional shares, and options is in high demand among European investors. If Webull can replicate its US success overseas, the growth runway gets significantly larger. Expansion into new geographies often comes with upfront costs, but the upside in user acquisition and deposits can be exponential. So when you line up these fundamental drivers, record revenue growth, record user assets, crypto relaunch, and international expansion, you can make a strong case that the company deserves a higher valuation multiple than it currently commands. And that's where the $20 target comes in. Now let's talk about the technicals. Webull has been gaining momentum on the charts as well. Its relative strength rating has climbed into the low 80s, with recent upgrades citing it as a stock showing leadership qualities compared to the broader market. That matters because momentum traders, quant algorithms, and institutional models all start to take notice once RS crosses above 70 and into the 80s. With Webull now sitting around $14, the market is essentially testing whether that level becomes a new floor. If it holds, the breakout case gets stronger. Think about the setup. Webull traded in a range between $12.50 and $13.50 for weeks. On Monday it broke out to 14, and since then it has held that level 3 days in a row. That is exactly the kind of price action that traders look for in a consolidation before a bigger push higher. A decisive move above $14.50 and then 15 could trigger technical buy signals and set the stage for a run toward 20 over the coming months. But let's be clear. For Webull to hit 20 by year-end, several things have to go right. The first is that revenue growth needs to remain strong, ideally north of 40%. That means trading activity has to stay robust, both in equities and options. It also means crypto adoption needs to deliver incremental revenue. If crypto trading volumes ramp up, the top line could beat expectations. If they don't, that lever fizzles out. The second requirement is international traction. Early signals from the Netherlands launch will be scrutinized. If Webull can show real user growth in Europe, investors will start to model in bigger numbers for international expansion. That can drive a re-rating of the stock. Without international traction, the growth story looks more like a US-only play, and the multiple might stay compressed. The third is macro sentiment. Fintech stocks thrive when the market has a risk-on appetite. Rate cut expectations from the Federal Reserve have been supportive, but that can change quickly if inflation data surprises to the upside. A friendlier macro backdrop is essential for Webull to attract new buyers and sustain momentum. If volatility spikes and the market goes risk-off, Webull will feel the pressure along with the rest of the sector. So the path to $20 by year-end is contingent, but not unrealistic. Strong revenue growth, crypto traction, international expansion, and a supportive macro backdrop could push the stock higher by 30 to 40% from here. At $14, that's about the magnitude of the move required. It's also worth considering valuation dynamics. Webull announced a $1 billion standby equity purchase agreement earlier this year, and that weighed heavily on the stock at the time. Investors don't like dilution, and any future funding deals will be scrutinized. However, if the company can show that the capital is being used to drive growth that outweighs the dilution, the market can forgive it. If investors gain confidence in Webull's ability to manage growth without excessive dilution, the multiple could expand, which would help drive the stock price toward that $20 mark. Now let's balance this with the risks. Webull is still unprofitable, and losses actually widened in the most recent quarter. Expenses for marketing, compensation, and infrastructure are growing as the company scales. If those losses continue to widen without a clear path to profitability, investors could hesitate to reward the stock with a premium valuation. Competition is also fierce. Robinhood, Fidelity, Schwab, and international brokers are all fighting for the same pool of digitally savvy investors. Webull has to differentiate itself not just through pricing, but through features, user experience, and innovation. Then there's the risk of crypto volatility. While relaunching crypto trading is a growth lever, it also ties Webull to one of the most unpredictable markets out there. If crypto sentiment sours, it could directly drag on trading volumes and revenue. So what's the best way to frame the story? I think it's to acknowledge both sides. Webull has the fundamentals, the technical momentum, and the catalysts to justify a $20 stock price by the end of the year. But the path isn't guaranteed. It requires execution on growth, traction in new markets, favorable macro conditions, and resilience against competition. For bulls, the argument is clear. Webull is growing fast, adding new revenue streams, expanding globally, and now breaking out technically. $14 could just be the start of a bigger run. If all the levers fire, $20 by year-end is within reach. For bears, the argument is equally clear. Losses are widening, dilution is a risk, competition is fierce, and crypto is volatile. Without flawless execution, the stock could just as easily stall or pull back. The way I see it, the consolidation around $14 is actually healthy. It shows that the market isn't rejecting the breakout, it's absorbing it. If Webull can hold this level and build a base, then push higher on strong volume, it could quickly gain momentum. A breakout above 15 would likely bring in new buyers, and from there, the road to 20 looks much more plausible. So to sum it all up, Webull closed Wednesday at $13.97, modestly down by 3 cents on the day. But it has now held around the $14 mark for 3 straight sessions, after a strong rally earlier in the week. The fundamentals are strong: revenue growth, record user assets, crypto relaunch, and international expansion. The technicals are improving, with relative strength ratings climbing and a breakout past prior resistance. The risks remain, with losses, dilution, competition, and crypto volatility in the mix. But if Webull executes well and market conditions remain supportive, the stock has a legitimate path to $20 by the end of the year. What do you think? Is Webull on track to make that kind of move, or is it still too early to be that bullish? Share your thoughts in the comments, like the video if you found this analysis helpful, and subscribe for more updates on Webull and other fintech growth stories. Thanks for watching, and I'll see you in the next one.